Hello, guys. This is your guy, Charles, Trader C. Brown. I want to begin to do the analysis for the week, and I want to say welcome to week 10. We are now in week 10. Wow, gradually we're moving. The year is going. This is month of March. So the first week of the month of March, we're looking at this trade, right? We want to look at different pairs today. I'll be looking at GBP USD, Euro USD, and Euro AUD this week. At the moment, those are the pairs I think we might be able to see some opportunities based on what the market is intending to do. Okay, first of all, I'll go to the higher time frame just to show you what. Obviously, I think I should let you know what we did last week. We had two trades last week. The first one was we had a trade. Let me go to 15 minutes time frame to show you where it was. We had a trade, this trade right here. We had a trade here. This was the first trade we took last week, and that was on Thursday. We took this trade. Was it the first? Not the yeah. On Thursday we took this trade. Then on Monday, obviously we got no trade. This was on Wednesday. Remember, we woke up the other day, the market started dropping. Oh, yes, this is the one. This is the one we took on Wednesday. I remember now. This is the trade we took on Wednesday last week. We had a drop, a consistent drop. And those of you that took it in the trading lab, you can understand that we were targeting. We saw overall market before we came to 15 minutes to target this order block that was here. Okay, remember that. So we're able to target that order block, and price came in there and tag into it that day. And we had a beautiful 1, 2, 3, or 1, 2, I say, yeah, 1, 2, 3 trade on that. We longed there. This was our entry on that trade. And we targeted 1, 2, 3 because our stop loss was just strictly below that. This was our trade last week. So it was a beautiful trade. Actually, we targeted this high. That was our target, the high. But our stop loss was something around there. And I closed out immediately. I hit 1, 2, 3. I closed out on my trade. Immediately I hit 1, 2, 3. And we had a reversal. Price came back down, retraced back down, and went up above, eventually see hit TP. Anyway, so even though you didn't close out, you left it throughout, you would have still hit your TP there. That was the first one on GU. Then the last one we took on GU, we didn't take this trade. We took the sell. Okay, because of the news, I didn't take this trade that day. I wanted to take that buy, but we didn't take it. Now, this was the last one we took on Thursday. On Friday, there was no trade on Friday. Now, this sell that we took on last, which was on Thursday, was the second trade we took, and it came up from this angle. We were able to look at the overall market from the higher time frame, and then we target that, okay, price will come to our premier zone, and then we're going to sell because the market looks selling. It was looking like as though it was going to sell, obviously, overall, which is the higher time frame, gave us a direction that we're selling based on our bias. So we decided to come down to the lower time frame and target this beautiful zone here. Now, I would like to show you what the zone was like so that you understand the trade. Great. Which was what was it? That one, not this one, not that one, this one, yeah. So this is Thursday right here. Okay, that's the trade. So this is what we're looking at. As you can see, we had a direction already from the higher time frame. So we decided to stream down to see the possible way the price will get to this order block here. So we had another block from the 1 hour. So we had a 1 hour order block, order flow. And then we were targeting that trade right there. So I was able to give a trade short on that angle right there, and we had a very sniper entry, and we targeted 1, 2, 3 as well. I think 1 to 4, it was more like that. So we target that trade. It was a beautiful trade overall because I think we target the low of that. That was our target, and price still went even lower. So let me show you where it was on the screen. As you can see, this is it. This was on Thursday. As you can see, this was the order we gave, and that was the order block, and that was a trade. We already did an analysis. I put a trend line there expecting. So price eventually hit this low, and we're also targeting another order block over there. So it was a beautiful trade. It was a lovely trade last week. We had 2 trades, 2 good wins. So for those of you in the trading lab, congratulations. And so let's look at what we have this week. I don't want to spend time on that. So if you want to join the trading lab, the link is in the description of this video. Join the trading lab, and you pay 30 quid for 1 month for 30 pounds. Yeah, that's what it is for 1 month. And in the whole month, you are going to be having beautiful trades. So there's no way you will not make your money back. So if you are struggling to be profitable, consistent, profitable, then get into the trading lab. That's what I'll tell you. The link is in the description below. If you're wasting time, waste it. That's fine. That's fine. Don't join. Don't be there if you don't want to be there. But you know what? If you want it, get in. Okay. I'm going to just remove everything in here and show you 2 things. Number 1, the market is still ranging on the higher time frame. If we check the daily, we can see that the market is still ranging. But the question is, how come do we still trade this ranging market? I'll show you. That's the skill. That's what the skill is all about. Anyway, never mind. We go to, as you can see, this week, that day closed bearish. And you can see the previous week closed bullish. And this week, that previous week, previous week. Okay, we're talking about week 8, week 9. All right. So this week 8, this week 9. So week 9 closed bearish, and week 8 closed bullish. So what's going on? Indecisions here. Because if you could look at it closely, you would understand that the bullish are still strong here a little bit. They're still here a little bit. So we have the bullish market still coming up. They're trying to go up. They're trying to go up. That's what we're saying. So, but overall, we are seeing a weekly time frame that the market is bearish. So the market is strongly bearish. Breakup structure to the lower side. Okay, you can see that beautifully, breakup structure to the lower side. And we have that structure coming in that the market. Let me just show you that breakup structure, and then there's a pullback in here. So here is a previous high that created this recent lower low. So we have a structure here, and then there is another target low that hasn't been broken yet. So we only have 1 lower low after this move to the upside. So here is our lookout for GU. Well, that's why we have a lot of consolidation bridge there, because the market is still ranging at that level. If I should put my fib on there, you will notice that the market is ranging right there. You see, on 61, 60, 50, 61. So it's ranging. So that's the challenge. But remember, this is a weekly candle, so we're trading immensely within that, within those frames. We're looking at this region here. We're trading within that region. But the question is, how come we're trading this? Well, that's what I'm talking about. So now let's go back to daily. If you look at the daily time frame, you can see multiple structures given here, ideology of this imbalance that has been filled. So we have another internal imbalance here that has been filled beautifully, and then price is trading below 61 still. So that is another sign that the sellers are still pushing, trying to push price down. So we can see that the sellers are still in the market still. So let's go to 4 hour. And now on 4 hour, this is where we implement the strategy properly. So first of all, I'm looking at what the market has done so far. Well, we are still within the range of our previous market, except the fact that the market took out the previous low. So first of all, let me take out this fib, and I'm just going to do the walkout through. So we have price give us the previous high there, this swing high went to the high, and we have this low that was the range, and eventually the range got taken out. So now we have a new low range, which is here. Okay, and now we have a new range high, which is here. And the question is, what does that mean? Because this was the low that was taken out, this low, and we have a reversal. So for us, we are looking at a non-follow through to the upside. So we're still looking at a buy market here. So it's telling us that opportunity to buy the market is present. Well, like I said, it's still a struggle. We know that overall is a sell. So even though it's telling us that we should buy, that means we should be looking at reverse at the top, not at the bottom though. So what's going on? So we can see expect price to push higher, to take up this high and then give us opportunity to sell. So at the moment, GU is ranging. So the only people that will benefit from this analysis are those who will trade the daily analysis that I sent on my lab. So if you're in my trading lab, you're going to be able to benefit from it. But let's look at the overall market. Is a sell. Okay. So just in case you're looking at it to say, okay, where should I sell? You go back to, this is a 4-hour time frame. Just look at what the market is doing here. Okay. Look at what the market is doing. This is the beautiful swing low, swing high. I'll just show you. That's a simple strategy to look at it. And then you want to sell from that angle. So if you're selling, this would be a long-term trade because you're looking at maybe 1 to 3 days before your TP hits, maybe so. So watch price here and then put your stop loss right there. Now be careful because we still have price could come up to the zone. Price could come up to this order block and then tag you out. It could do that. So the best thing is put your stop loss over there. That's about what? This 4-hour time frame, that's 100 pips. Remember, it's 4-hour time frame and that's 100 pips. Put your stop loss over there and then you target this zone, which is 17 minus 27 right there. Now, when you do that, you can see that we have 1 to 2, which is not good enough. So the best thing is you will want to adjust your entry to this high because there is a liquidity high there. Okay, there's a liquidity there. So we see that this place is liquidated. It has a liquidity pool. So we have liquidity pool right there. So if price is going to come there, it had to tag you in the same time with its targeting. So this would be your entry. And then you have a beautiful 60 pip stop loss or something. And then you have a long 1 to 4 risk to reward, which obviously the market will eventually give you over time throughout the week. So this is what you should be looking for on GU right now. But if you want to look at the daily trade that I do, I will encourage you to join the trading lab because on the trading lab, we're going to have to look at the daily trades opportunity and then we'll take that. Now, this is where the problem is right here. So we have price creating this structure. What is it going to do? What is it going to do? So is it going to break above? If it break above, then expect that it's taking liquidity. If it breaks below and then is already sold, then you may have missed your entry. So again, those are the things you have to look out for. But I expect that price will still push higher because I already have enough follow through on the 4-hour analysis telling me that price wants to still go up. So if price wants to still go up, they may want to target that liquidity high and take it out. So this high will be breached eventually, and then increasing that range for us, and then we'll get the opportunity to sell even more. So is it still a sell market? You can see on the 4-hour, multiple lows have been taken out, except this low that gave us this slight low here. So we see this massive push up here, this low that gave it that push that break this high, another break of high. But again, this structure has been broken. You see, this high here has been taken out. So because this high has been taken out at this low, we are now looking at selling. So that's Euro, that's GU for you. Let's look at Euro USD. Now, on the Euro USD, the market is almost acting the same with GU, but let me just remove those drawings. As you can see, the market is also having that behavior. Let's look at the weekly, for instance. The weekly is looking very bullish. We have 2 candles closed bullish for the week. Rejection, multiple rejection. So we anticipate that the market want to go back up, even though we have a breakup structure. All right, this is even clearer than GU. We have a breakup structure right at the bulls. We have a rejection over there, price trading below, but now rejecting back up. By rejecting at 38, it shows that price want to give us a double bottom liquidity grab here, and then it's going back up. So for that reason, Euro USD looks like it's going to reverse and start going back up. And the only idea to trade in this is to go to a lower time frame to look at the behavior properly, which is on the daily and 4-hour. Let's look at the daily. If you look at the daily, beautifully, it looks like it said to me, low structure broken. So this is the range that broke the structure. So we can still have opportunity to trade a sell, but still, let's look at the range. So look at this range. Sorry, we look at this range that took out this low. All right, that's a swing low. So all right, you see why the market is still going to go up. So the market will still swing up a little bit to tap into the 60, into the 61 before selling. So that's the daily time frame. So there's still a lot of room for the market to go up. So let's go back to the 4-hour. Now on the 4-hour time frame, this is where the beauty is, where you want to understand the structures. As you can see, on the 4-hour time frame, we have this swing low. The market is trading low, was trading low for a while, and now took out the structure highs, took out a lot of structure high, but this high is still maintained. So we have only this high that has been broken. We have this rally, and then market consolidate. So the question is, what is it doing? Well, we anticipate that there is an order block here, which has already been mitigated. So this one is no more an issue. It has been mitigated. That's why he sold from there. So this imbalance has been filled. It's no more relevant. So what are we looking at again? Well, we have other strong imbalances, which is at this top. Massive imbalances at this top. We have this strong order block there that is so valid on the 4-hour, okay, that need to be monitored. Okay, we have to monitor that guy. All right, this is 4-hour order block over there. That is a long walk to the top. Okay, we have another block. Let me just put it there just to give an idea. But it's a 4-hour order block though. So that's a massive ride. So we can anticipate that the market is going to do this. Anticipate that the market is going to give us a ride to the upside like that until a target to the other block before dropping again massively. So that can be an idea of what the price may do. But before that, let's look at, let me keep that other block there. Let's look at what we are going to be set, because that's a lot of pips to the upside, isn't it? So we're going to look for opportunity to get into the trade within the week. So it looks bullish at the moment on Euro USD because price is rising up to meet the daily 61 Fibonacci retracement. So for that reason, we're looking at price rally up here, and then price giving us a structure here. So we are in a range and it had to be broken. So therefore, price is going to rally up to tap into that structure and then give us opportunity. So right here is a beautiful setup here, another opportunity, but still it's concerning. So we might look at another order block that has not been mitigated, which is obviously this has been, all right, this is the one. So we might look at this order block from here. We can see there's a range here and there's a range here, which already has been tapped. We can see that one has been mitigated as well. So it's no more useful until we have maybe price take out these highs and then try to tap into the high. So on the 4-hour time frame, I'm only going to use the strategy that will best suit us for trading the range. And that is what I'm looking at right now. So first thing is we have a structural high that swing up and took out a high that gave us a new high. So when price came back down and rally up again, it gave us a low. So previous low was this low and previous high was this high, or still the high though, previous high still. And then price smashed down and took out this low. First, the low was breached. So we have a breach of this low right here. And that gave us an equal low. Now, if you notice, okay, that low also was breached. So now this is the low that has been breached. So now this low has been breached. What that means is that we have a new low here, which is here. And now what happened to that breach? This was a strong pullback, but we have a reversal to the upside, which means the candle closed above that line here. So this low, the candle closed above them. So that means we have a reversal right there. When the candle closed above it, you were supposed to wait for that pullback and tag into this other block. You see that other block that was there? There's another block there. If you go to 1 hour, you will see there's an other block at this place that price tap into and then rally up. So this was a good confirmation that price was going to go up, and it went up already. Okay, that is our last stage of the low and the what do you call it? The reversal pattern. So it shows that we're buying. Like I said, its price is still going to go up. So right now, when do we buy? How do we buy? So you wait for price to give you opportunity to come back down. If it doesn't break that high, you wait for price to come back down into your zone. And that is a trend line confirmation. And then before we look for a buy. So Euro USD give us opportunity to long at this level. We want to wait for price to come up there, and then we target the next opportunity high, which is this high here. Watch out that high over there, and your stop loss obviously is going to be below that previous order block liquidity, and then you have 1 to 5. This trade is possible if you pay attention to what is going to happen this week. So for those of you trading in the trading lab, expect this kind of setup to come in this week. I'm watching this Euro USD on this 4-hour time frame to see when price is going to reject. Now there's no way, there's no problem if I can sell there. If price rejects and give me a signal to sell, I will sell, because there's still another block right there that needs to be given to us. If I go to 1 hour, we can see that other block has been mitigated anyway. So we could use that as a way of price rejecting from there. It may take out this liquidity here and just tap there a little bit and start dropping, which is okay. It's easy to wait. 1 candle, 1 push. All right. So that's what we're looking at on this pair. So I'm expecting price to take out that liquidity zone. I think it's too far. So, and then from the 1 hour time frame, we're looking at price to come tap into the low, this wherever it is. And then we have this other block here, beautiful. Like I told you, there will be another block right there, which you can see obviously right there. And your stop loss is just a little bit below it. And that will be 1 hour order block for you to trade right off. Beautiful. And we're looking at that trade up. So that's what I'm looking at on that pair on Euro. So a bonus pair, it will be Euro USD, Euro AUD. Let me show you this. This one is a swing trade I want you to take. If you go to the daily, you see that price created a new structure high break, and then we have this pullback. Now remember, price just rejected at the order block on this. This is called secondary order block. But you can see price broke above the high. So that means structure high, price want to go up. So for that reason, all I would do is measure that high to that high, and then go to my lower time frame, which is 4 hour. And I want you to get your entry at this time frame, 4 hour. Now, there's a trick here. Price already tap into this order block. Maybe it's already mitigated, but it's not proper. This is 4 hour order block right here. So price already tap in there. So for me, that could be a challenge for everyone who wants to trade that, to say, okay, let me just buy from, no. So what I expect you to do is this. I'm going to give you this as a bonus trade. So put your entry here and you target here. Okay, first of all, but your stop loss is very, very strong. So the first thing is wait for price. This is what you're going to do. Wait for price to push up, break above, and come back. It's going to come back again. Come back in there. It may even go lower. That's the problem. It may go lower because of this order block, again, to test it before going up. And if this happens, this is how I expect you to position your trade. And now I'll take these off, because that may break. If you tap into that other block the second time, which is going to be on that'll be on the, you tap into it, If it does, then you have your entry right there. That will give you that will give you a beautiful trade setup, like beautiful, like that. You're going to have a beautiful trade of 6% in one trade. So I'm expecting that to happen. So take note. What I mean by that is this is 4-hour time frame. Is it calls swing trades. So you want to do this. Put your trend line there and then watch for price action. We see the first rejection there, right? So we want to see price break above a little bit, like a false break. He was going to do that and then retrace back down and catch in orders from this low. And then giving us a false structure break here. Whereas the major structure is here. Do you know that? But we're using this order block as an edge. So the main structure is right there. So once we start seeing price breaking above, then we get in. So this is what I have for you guys for the week. I believe you guys enjoyed it. And I want you to go watch this video again and again to understand the kind of trades we're going to be looking at this week. And also for those of you who's watching for this video for the first time, hit the like button, hit the subscribe button, ensure you turn on the bell notification because you might be missing out a lot of beautiful things that I send there. So you can get a notification or alert that we just uploaded or send you a content that can help you be a better trader. And I'm planning to do a program where I will be hosting a lot of new beginners who wants to learn how to trade, and I will be teaching them how to trade nearly for free. So watch out for that. The information will be out soon, and get ready to smash the market whenever, anywhere, anytime. Thank you guys, and I'll see you in week 11. Until then, keep grinding and keep peeling the peeps. Bye for now.